We are live from Bloomberg's world headquarters at 731 Lex. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the aftershocks as FTX contagion continues. Ryan Selkis of crypto research firm Messari will share his take on the damage done and where we go from here.
And another invitation. Congresswoman Maxine Waters again asked Sam Bankman-Fried to testify before the House Financial Services Committee next week. We'll have more on the response from Washington with Katz of Capital Alpha Partners.
Plus, like the end of Scarface, but with spreadsheets. That's how our reporter Zeke Fox described his visit to SBF's Bahamas penthouse after the exchange's collapse. He gives us an inside look at that interview.
All right, so all of that is ahead, but first let's get a snapshot of the markets today. And Matt, I find it incredibly interesting that broadly it is not a great day for risk assets. Stocks are down basically across the board. The NASDAQ 100, which typically trades in pretty close correlation with cryptocurrencies, is down about 1.8%. Crypto-related equities like Coinbase, of course, a public exchange, down nearly 8%. At the same time, we are seeing very little movement in the digital tokens themselves. Maybe a bit more for Ether, down about, call it half of 1%, trading right around the 1,250 level. But just take a look at Bitcoin, essentially unchanged on the day, just below that $17,000 level. It has been remarkable how steady Bitcoin, which was once one of the most volatile assets out there, has been in the last couple of weeks. The $16,000 to $17,000 range, Matt, is where we're stuck.
Yeah, the stability, the lack of volatility has really been noteworthy. Maybe that will change 1 week from today. On December 13th, the House Financial Services Committee is going to hold a hearing investigating the collapse of STF. And Sam Bankman-Fried might be in attendance, but he might not. Responding to an invitation to participate from a repeated invitation from Chairwoman Maxine Waters on Twitter, he says, Representative Waters and the House Committee on Financial Services, once I've finished learning and reviewing what happened, I would feel like it was my duty to appear before the committee and explain, I'm not sure that will happen by the 13th. But when it does, I will testify. Waters shot back yesterday. She tweeted, based on your role as CEO and your media interviews over the past few weeks, it's clear to us that the information you have thus far is sufficient for this testimony. She says it's imperative that you attend our hearing on the 13th, and we are willing to schedule continued hearings if there is more information to be shared later. In a recent Business Week story, Bloomberg Investigations reporter Zeke Fox takes an inside look at Sam Bankman-Fried's Bahamian penthouse after the fall of FTX. He writes that the grim scene reminds me a bit of the end of Scarface, with Tony Montana holed up in his mansion, semi-incoherent, his enemies sneaking closer. But instead of mountains of cocaine, Bankman-Fried is clinging to spreadsheets filled with wildly optimistic cryptocurrency valuations. Zeke is going to join us right now to talk about that trip. He's back in New York. Zeke, thanks so much for coming on the program. What was it like visiting SBF for a second time? Because you had previously been with him on, I guess, the trading floor, right, with all of his super genius billionaire buddies.
Yeah, I went down to FTX's offices in the Bahamas in February and wrote a pretty positive story about FTX. Totally missed all the red flags. And so now I returned a couple weeks ago to try and figure out what really happened. And I really wasn't sure what to expect. Honestly, Bankman-Fried seemed quite similar to how he did the first time. I wasn't quite sure. It took me a while to figure it out. Like, was he delusional? I mean, his $32 billion exchange just blew up. But I realized that he was really on this kind of apology tour, and that he is pursuing this weird strategy of just instead of clamming up, just like talking so much about what happened to try and spread like his preferred version of it.
Right, and there's a line in here in which you talk about one of your interactions, and you ask him, you misplaced $8 billion, and he says almost proudly, misaccounted. Did you get the sense that he really firmly believed that this was just an oopsie in risk management, despite the fact that, as you point out in the story, he was an MIT grad, he was at Jane Street, a relatively prestigious Wall Street firm. I mean, this was a guy who was good with the numbers.
Right, he's like an expert trader. He majored in physics at MIT, but he's basically saying, like, if you want to believe his version of the story, you have to believe that he essentially forgot that people sent him $8 billion, then gambled it away unknowingly. And it's very hard to believe. I had trouble following his story, and once I figured it out, it didn't make much sense to me. This is clearly a guy who cares a lot about money, who thinks about it all the time. So the idea, even if it was to give it away, he still wanted to make his pile really big. The idea that he never took a minute to try and like count his money, figure out his company's accounting. I mean, I guess it's possible, but it just seems really implausible to me.
Yeah, he seems to have no aptitude at all for numbers in his in the last few interviews that I've watched, and it's odd that he's even giving interviews in the first place. Why do you think he continues to talk to the media so much while notably staying out of the U.S. jurisdiction when his lawyers must be telling him, stop talking?
You know, I think the media helped build him up to played a big role in creating his image as like the only honest guy in crypto. And I don't think it's crazy that for him to think, hey, they helped me out on the way up. Now I can talk my way out of trouble. And he told me that when I asked him that he probably would testify before Congress. I'm surprised that he's not going to. Presumably he could even do it by Zoom. I wouldn't be surprised to see him there because he's been talking to almost everyone who called, and it seems like he could just give them the same story that he's been telling the press.
All right, well, we'll see if he shows up. That hearing is a week from today, and we'll, of course, have full coverage of it here on Bloomberg Crypto. Bloomberg Zeke Fox, thank you so much, and really an excellent story. If you haven't read it yet, you probably should. All right, joining us now to further the conversation is Ryan Selkis. He is co-founder and CEO of crypto market intelligence and research platform Messari. He's been incredibly active on Twitter over the last several weeks in the wake of FTX's collapse. Ryan, can you just give us your real-time read on how much damage already has been done and how much might still be left to do?
It was certainly a setback. I don't think anyone could possibly argue that. But when it comes to talking about the postmortem, I think we just need to let the justice system work its magic, and those things take time. So won't necessarily talk about any specific criminals or instances of fraud. And really, we're more focused on, is there ongoing contagion risk to the crypto markets, and where will we set some type of bottom or stability in the market so that we can start moving forward. There has been a lot of progress that's been made, but this was certainly a setback.
You seem to be a lot more measured right now, Ryan, than you were on your Twitter feed, than you have been on your Twitter feed. I guess maybe you've talked to your compliance people, but it seems like in the past when there were big instances of fraud, and I'm not saying that was this, but the DOJ has nabbed these people pretty quickly. Bernie Madoff, I think it was like 7 days before they got to him. It's been a month now, almost, since the collapse of FTX. Do you not expect the DOJ to go down to the Bahamas and grab Sam Bankman-Fried?
Well, like I said, I'm not going to speculate on what a specific criminal or fraudster is going to be subject to when it comes to the justice system. And yes, I am very colorful on Twitter because I care deeply about this technology, the people in it, and I think this is a black eye for all of us. Now, having said that, you can talk about what it takes to move forward. And I think that's really where the conversation is pivoting from the professionals in the industry that have been working in crypto and advancing this ecosystem for a decade. And we have our work cut out for us next year. I thought the last segment was spot on because in many respects, there was a media coronation of certain folks that claim to be representatives of the industry, but were relative newcomers. And those folks, I think, in many cases overplayed their hand. Many of them, not just the one individual that you're looking for comment on, but many of them, I think, have been washed out of this market cycle because of excessive leverage, because of irresponsible behavior, and in some cases, yes, due to outright fraud. But the innovations that underpin this ecosystem have all made significant strides forward in the last several years. And I think that's a foundation we'll be able to build off of as long as some of the more measured and compliance focused firms are part of the conversation in DC and in Europe and everywhere in between to make sure that something like this can't happen again, that the centralized players that are handling customer funds are well regulated, and the tech can continue to thrive in the U.S.
Ryan, you and your firm, Messari, you research track and you analyze developments in the crypto industry. So having looked at FTX over the last 4 weeks, is your assessment that this was simply a mistake, an accounting error, an oopsie, as some people have called it, or do you think that something else happened? What happened here after looking at this for so long?
You don't need a market intelligence firm to keep track of $8 billion. So I don't think that I really need to comment much more beyond that. I mean, this is such an egregious case that we're talking about that I just don't feel the need to comment on it further, right? And instead, what we're really looking at, to be honest with you, is where there might be other firms that are impacted. FTX was a major counterparty to many of the lenders in the space. The lending sector of crypto has been completely eviscerated this year, with about a dozen firms experiencing 9-figure losses, if not outright bankruptcies. So I don't think that we're going to be able to really progress until this damage is fully contained. And we know just how far this daisy chain of bad credit is extended going forward.
Ryan, can you just give us a sense of which dominoes you think are at greatest risk of falling? Can you name names?
Well, I think that they are part of the public record right now. You have one major lender in the industry, Genesis Capital, which did suspend withdrawals a couple of weeks ago and is working on a resolution right now for something that they call a duration and collateral mismatch. I happen to believe that there's some truth to that just based on public filings and what we know about them as a lender. That said, everyone in the industry that's partaken in any sort of crypto collateralized lending has been under an enormous period of stress financially, and some of the liquidity issues, I think, have yet to fully unwind themselves from the system. So we're keeping a close eye on that situation. Many of these firms are private, and there are not disclosures that are currently available to investors publicly. So we're trying to do what we can with public information and on-chain forensics, but it's an incomplete picture.
Ryan, what's going to be left still standing?
Oh, I think there's plenty that's still going to be left standing. I mean, people have short memories generally, but law is permanent. So when you think about the advances that have been made in blockchain scalability in terms of the accessibility and ubiquity of stable coins, when you think about the 0-to-1 innovations that have happened in decentralized finance protocols, non-fungible tokens, DAOs, all of these other kind of exotic things that look like toys, they are going to be the foundations for real killer applications tomorrow. Big thing that needs to happen and that we need to get right in the aftermath of this catastrophe at FTX is permanent legislation and good, clear regulation of centralized intermediaries within the crypto space. I think if we can get that right without throwing the baby out with the bathwater and crippling innovation in protocol development and software development, then we're going to come out the other side of this okay, and I think much stronger.
All right, and we're going to talk about that potential legislation next, right, Matt?
Yeah, absolutely. I mean, a lot of people would say there was legislation already there, and
enough.
Maybe FTX just wasn't following those guidelines closely enough. Ryan, thanks so much for joining us. Ryan Selkis there of Messari. Coming up, we're going to discuss the progress on crypto regulation with Washington policy analyst Ian Katz of Capital Alpha Partners.
Plus, David Solomon, the CEO of Goldman Sachs, says crypto technology could help business. We'll have part of that interview ahead.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
I'll tell you one category that I'm still hoping, and I know it's getting tougher every day, but what I'm hoping is that we do something to provide some legislation and regulatory clarity in the crypto space. We have nothing. We have complete regulatory uncertainty, legal uncertainty, and that leads to all kinds of problems, including, by the way, the migration of money and activity and entrepreneurs and developments to overseas jurisdictions where, as we've seen, regulations aren't so good.
That was Republican Senator Pat Toomey discussing crypto regulation in Washington on Bloomberg Balance of Power last week. Joining us now to continue the conversation on Washington policy is policy analyst Ian Katz. He is managing director at Capital Alpha Partners. Ian, obviously a week from today, we're going to have our eyes on Capitol Hill, not in the Senate, but in the House, specifically the Financial Services Committee, where I expect they will make a lot of noise and be seen publicly grilling people on what happened here with FTX. How quickly do you think it could actually translate into some kind of legislative action?
If you're talking about bills, obviously there are already a couple of major bills out there, but if you're talking about action as far as something making its way through Congress and becoming law, I still think we're several months away from that. I mean, maybe more. I'd be a little surprised if we actually saw Congress pass a law before mid-2023. That would be actually pretty good for the way that Congress works. Of course, if you have another blow up, another implosion, some big crisis, that could accelerate the pace a little bit, but I feel like they're still so far from a final finished product that it's still a long ways off.
We have to obviously figure out what happened first, right, Ian? And a lot of people have theories, and there have been tons of allegations, but we don't really know exactly. We haven't seen the evidence. Nonetheless, there are already a number of regulations against things like theft and fraud. What more can we expect, for example, Gary Gensler and the SEC to do?
Well, there's obviously two elements to look at here. One is regulation and the other is legislation. If you're talking about regulation, it is clear that the regulators feel like they're pretty limited. So Gensler can try to ramp up the enforcement unit at the SEC and try to be more aggressive. But with his resources and time, he could probably only go so far. There's only so many people. There's all the reports about them all feeling like they're overworked. These cases take a long time to go through the enforcement pipeline. And the CFTC isn't even making the claim, really, that they're overseeing securities. So they could maybe try to get more aggressive as well. But I think it's sort of marginal to moderate what the regulators can do. Where we're going to see more discussion is over legislation. And I feel like at the end of the day, whatever you want to call regulation, whether it's reporting to an agency or something more, I think at the end of the day, we're going to get to a place where examiners or inspectors, sort of like with banks and securities firms, can go on site, look at the books, look at the finances of crypto companies, at least those over a certain size. And that will be what will make people feel like something like FTX is much less likely to happen again. I think that's the direction we're going to go in, but I think it's going to take a while to get there.
Ian, if you were to think about how this is going to change just the overall mood in Washington when it comes to crypto, obviously Sam Bankman-Fried had the ear of many people on Capitol Hill. He was an influential political donor. I'm assuming this has left a bad taste in many people's mouths. Do you expect the environment to be less friendly overall as a repercussion of this episode?
Oh, yeah, absolutely. And I think right now you're seeing the Democrats who, especially those who have been skeptics of crypto, doing the I told you so. And then I think there's still a group of some Republicans and some Democrats, those who are generally more favorable toward the industry. They're a little bit, they're trying to be quiet. They're not saying that much so far. But I think they're not at this, if you take a look at this like it were the stages of grief, I don't think they're quite at the acceptance level yet. They're sort of trying to ask questions. We saw that in the Senate Agriculture hearing last week, more questions than pronouncements and recommendations. I think they're still there. So, but long story short, we're getting to a place where everybody's going to be a bit more skeptical of the crypto industry, whether they say so publicly or not.
Ian, thanks so much for joining us. Appreciate your insight. Ian Katz of Capital Alpha Partners talking to us about what we can expect and giving us a little bit of a timeline. Be sure, by the way, to check out Bloomberg Crypto, the podcast. It dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Lyons with Matt Miller. And now let's get to some crypto stories that caught our attention this week. Nexo is phasing out its products and services in the U.S. The reason? A lack of regulatory clarity. The firm said it will continue to process withdrawals in, quote, real time from U.S.-based customers as it exits the country.
Binance is seeing a boost in trading activity. That's after the collapse, obviously, of SBF's FTX crypto empire. Activity jumped by 30% in October. Trading volume for Coinbase and Kraken rose as well. Of course, that was before the collapse of FTX.
Very point.
But still.
It all comes down to market share. Meanwhile, Goldman Sachs CEO David Solomon sees the potential in crypto technology. He spoke with Bloomberg's Sonali Basak from their U.S. Financial Services Conference in New York.
Offer a view on cryptocurrencies. I think they're highly speculative. They may hold value, they may not, but I'm interested in the underlying technology and how the underlying technology can help serve our clients, our customers, and really take friction out of the financial system and also help make it more accessible.
And essentially, Matt, what he is talking about there is something we have tried to differentiate between over the last several weeks, that you can't just talk about crypto as a basket. There's a difference between digital tokens and volatile assets like Bitcoin and other things like Dogecoin, for example, versus just blockchain technology. And clearly, he is thinking about those as two very distinct, different things.
Yeah, absolutely. And then you've got the centralized exchanges on top of that, which I think you should differentiate from the assets that you can trade on those platforms as well. It's very cool to hear Sonali with that exclusive interview with David Solomon and to get his take on this quickly changing environment.
Which is, of course, something Goldman also has been trying to adapt to as well. Really, all companies in financial services have been competing with this industry in some senses in ways like talent, for example. But obviously, a lot of that has been upended over the last several weeks. And it'll be interesting to see from a regulatory and legislation standpoint if we start to see regulations coming more in line for crypto like they are with the traditional financial sector.
Yeah, absolutely. I mean, those financial sector regulations probably do count as well for exchanges that trade financial products, even if their underlying assets are crypto.
Fair point. We're going to talk more about this next week on the day of that House Financial Services Committee hearing. So join us next Tuesday at 1 p.m. We'll be speaking with Danelle Dixon, CEO of blockchain nonprofit, the Stellar Development Foundation. This is Bloomberg.